So Matt and I were having a conversation about the market, and we were talking about some of the sensationalist headlines that have come out saying that, you know, the Canadian market is declining, it's crashing. And I just wanted to talk to Matt about that today. So Matt, what do you have to say to people who may be holding out for the market to crash, according to these headlines? Like, what's going on in today's market? What do you think?
Well, I think there's two things I want to address, and the first one is the headlines. And what's happening, and some people are pointing this out, is the headlines are focusing on decreases in sales or values, or what they say is average prices. And so they'll show like a 30% decline from last year or last month. And when someone looks closer at the data, they're showing the average prices of things that are selling. They're not actually showing the values of homes. So what's happening is less expensive things are selling. So in the last month or the last quarter or even last year, higher priced properties were selling. And with the increase in, you know, the multiple increases in interest rates, people's purchasing power has reduced, but properties are still selling. So what's happening is cheaper properties are selling, and the sale of lower priced homes is actually increasing over the last reference periods. So when people say the average price is dropping, it's actually only the average price of what has sold, which could be completely different properties. Last month, a bunch of single-family homes sold, and they were at a very high price. And this month, only one-bedroom condos are selling at a much lower price. So it's not really comparing apples to apples, but the headline is showing that 30% average drop in price. But what we really want to focus on is what's actually happening with home values. Are they dropping? And in some markets, there have been some reductions, but there hasn't been a wholesale crash or fall or even signs of such. And I think what people are, the second thing I want to talk about is people looking for a crash or looking for, I think, 2008.
Can I ask a question just to interject? Are prices down lower than they were pre-pandemic?
I don't believe so, no.
Yeah.
No.
So that's interesting to know.
We had such a large run-up of pricing during the pandemic, and in the last year, prices have gone up so high. Even if there have been some reductions, they have not reduced below those increases in the last year.
So these sensationalist headlines, when they're saying 30% reduction, they're talking about last February to now.
Yeah,
where the high point was.
And still only what's selling.
And is that relevant for your regular property holder?
Not necessarily. There's a lot more detail that has to go into an analysis of whether you own a property and what's going on in your specific type of property type. And what's going on in your specific market. So when headlines are using generic numbers, they're just getting clicks. They're not necessarily telling a story, but they're a good headline grabber, and it's worth asking questions. So when someone says prices have dropped 30%, well, that's worth looking at. I look at it. What does that mean? And when I look at it, I see that, oh, okay, well, $1 million home sold this month and a $700,000 two-bedroom sold this month. Well, that's a 30% drop, but they're not the same property. It's not showing a drop in value. It's showing a drop in what people are spending, which is important to know, but not to confuse the two.
Okay.
Because the market has changed. We're not selling as many expensive homes as we are selling less expensive condos, and that's good to know. What
was your second point?
My second point is that people are looking for what we've most recently experienced was the major crash in 2008. First quarter to second quarter 2008, when the whole global economy collapsed and property prices did fall significantly across the world. And so people kind of have that experience and they're thinking, oh good, if something like that happened again, maybe I'm ready, or maybe I can buy something, because prices have gone up really fast in the most recent couple of years. But nothing about this market is the same or looking like that. Employment is as high as it's ever been. Interest rates are actually rising, not falling. There's so many different factors that are going on that yes, we could see corrections, but it's not going to be like 2008, and we're not going to see drastic crashes, especially in our market where a vast majority of property holders are quite wealthy and not first-time home buyers. There are some in that market, but it's not the significant portion of Whistler's market. Whistler's market is significantly held up by recreational properties, revenue-generating properties, and things like that. But not to go into too much detail on what's really going on in our market, but just to say expecting a wholesale crash doesn't seem likely at this time. But we can keep our eye out for some corrections.
Like what?
Well, we've seen in some sectors of the market where some properties have come off their highest sale point very slightly, things like fractional properties, possibly leaseholds. The other thing we're seeing a lot of is people reducing their list prices. Now, this isn't necessarily a reflection of property values dropping. It's a reflection of people aggressively pricing based on, the last 6 months of increasing prices. And while the market has leveled off and sale prices aren't rising any longer, they're not actually falling, if at all, either. But people priced aggressively thinking the market was still rising, and now they've had to reduce their price back to what we are currently experiencing. So we are seeing price reduction. So overpriced property is kind of correcting their list pricing, and when they're correctly listed, they're selling, because we're seeing in our market still plenty of demand, still plenty of people interested in property. We've seen prices on a lot of revenue property buoyed by revenue, because our revenues are fairly strong. They're recovering quite well from the 2 pandemic years, which had big holes in the revenue and we couldn't rent properties because of COVID, but back to 2019 and numbers and rising. And so
people are still taking vacations.
People are taking vacations.
That's an important
and that is a great
factor.
economic indicator in property in Whistler, because as long as those properties are making a certain amount of revenue, they're going to hold their value, because some of the purchase decisions on those properties are looking at a potential cap rate or investment return on investment. And if the revenues are there and people are spending vacations and renting hotel rooms, and owning those hotel rooms is still profitable, so they're not losing an extensive amount of value.
So that's an interesting update on what's happening in the market. What do you suggest for people who are looking to buy, are looking to get into the market? What should they do right now?
Well, at any time, this isn't unique to this market. Anytime someone is looking to invest in real estate, they should really immediately be consulting a mortgage broker to find out what their purchase power, purchase capacity is, clarify their needs, maybe meet with a realtor to discuss what those needs and wants are, and start looking at the market to see what could meet those needs and what the prices of those are, and if those line up with our purchasing power. You want to be able to have your ducks in a row to be able to jump on opportunities. One of the articles we were researching had a single line I pulled out that I really liked is, like, in any market, you should never invest afraid, never be afraid, but also never be impulsive, right? You want to kind of find that balance of being ready to jump on good opportunities and being ready to recognize them so that you don't miss them. And that's the lack of fear. It's like, hey, this is an opportunity. I'm not afraid to jump on it, but also not to be impulsive. You want to be able to know what you're buying and have great advisors to help you identify them.
That's good advice, and we can help. Thanks for watching. Have a great day.